Well, hello everyone. This is Ashanti with Profit Mo Financial Services. I'm here today to talk to you about figuring out what your tax liability is for 2020. So essentially, this video is specifically for individual who worked a W-2 job. They worked a regular 9 to 5, and there was no side businesses or anything like that. So this situation is specifically for people who are trying to figure out what their tax liability may look like for 2020. One of the things I want you to keep in mind is that this is something that you can do early on in the year so that you're not surprised at the end of the year. One of the things at Profit Mode that we value is being proactive. Right now we're in November. I mean, we don't have that long to go to close out the year. But this is something that I want you guys to be, start to do and to think about, early on in the year so that you don't have those weird surprises, okay? So this is essentially how you do it. And this is actually what I'm going to utilize today is a draft that was put in place by the IRS. So it's not all the way finalized, but it gives you an estimate as to around what your tax liability will be for 2020. Okay, so let's get right into it. In this example, we have a married couple who brought home collectively $70,000. So right here, we have our $70,000 for both of their salaries. The standard deduction for individuals married filing jointly is going to be $24,800 as set by the IRS for 2020. This means that their adjusted gross income essentially is just their salary minus the standard deduction. It's $45,200. Keep in mind that a lot of people I know freak out, if they got a raise or they're making more money, they think they're going to be taxed on all that money. In actuality, you're going to be taxed on your adjusted gross income. You're not going to be taxed essentially on your salary. You're going to be taxed on your adjusted gross income, okay? And in this particular case, the adjusted gross income is $45,200. Okay, so here's the big deal. What is the tax liability? So this is very easy to find. The IRS has tax tables that they produce each and every year. Okay, so in our example, their adjusted gross income is going to be $45,200. This does not take into account anything else but the standard deduction in their salary. So you're going to literally go to Google and type in tax table 2020. All right, and for them, it was $45,200. Okay, I'm going to spread this out a little bit so you guys can see it. So with the 45, you can actually hit Control F when you're in the inside of the tax table and put in your 45,200. And it'll take you right there. All right, so essentially, this is their AGI, and it's $45,200, and they are married filing jointly. So their tax liability for the year is $5,026. Okay, so that's $5,026. That's their tax liability. Now, the way that you can see, if you're on track for that, since it is November, is you can look at your last check stub. Most companies, they use ADP, log into your online portal, look at your last tax stub, your check stub, and see exactly how much money was withheld federally year to date. Okay. So for some people, they, put exempt for a portion of the year, and other people, they don't do anything at all, and their tax liability paid in taxes, federal taxes for the year are actually really high, and they haven't adjusted. But you can look on your paycheck stub on the federal portion year to date, and it'll have a number. More than likely. It may be $3,500, it may be $6,000. So at this point, you know that you've paid your fair share of what the government requires for your particular situation and your salary and your tax status, which is married filing jointly in this situation. Okay, so this works, I mean, no matter what salary you have, if you're using a standard deduction and you're a regular W-2 employee and there's nothing else that's, different or out of the ordinary that's going on, you go to work, you get your paycheck, you have your gross, and then you can figure out your AGI. So hopefully this was helpful for you. And so that way you can plan throughout the year. Maybe for 3 months or so, you decide that, at the end of the 3 months, maybe at the end of the year, that you don't want any federal taxes taken out. So you can plan for that by the beginning of the year by taking a little bit less salary and by taking more taxes out, just making sure that you hit that $5,000 and $26 number. Then you'll know your taxes are covered for the year. Okay. My name is Ashanti Titus, and I am over at Profit Mode Financial Services. You can follow us on Instagram at Profit Mode Now. We're also, our website is Profit-Mode as well. If you would like to email me, you can email me at Ashanti at Profit-Mode. We are here to help you, and we definitely want to make sure that we are saving you money and keeping you aware of what's going on with changes or anything that can make your financial life easier. I hope that you all are staying productive and staying great and prosperous as well. And until next time, I'll talk to you soon. Bye.